Hello, I'm Peter Towers, Managing Director of ESS BizTools. Welcome to Business Plus newsletter for November 2025. Yes, the year's just about over, isn't it? But there's still a lot of work to be done. In this edition of Business Plus, we are continuing on from the article in the October edition, which we titled Research and Development Strongly Supported by SMEs. And that was a summary of the Research and Development Tax Incentive Transparency Report for 2022-23 produced by the Taxation Office. And it's worth reflecting on what that report had to say. 6,016 small business companies aggregating less than $10 million in turnover, because that's the way the report segregated it, represented 46% of the companies involved in the research and development program for 2022-23. I found that very interesting, and I hope you did also. So we have followed that through in the November edition with an article from research and development to the innovation journey, because that is the logical sequence of events. We start with research and development because of an idea, and it might be an apprentice on the shop floor. Goes to the foreman and says, "Hey boss, why don't we do such and such?" And it might be a great idea. It might save the business some money, or it could be a great product that could be sold to other businesses all around the world. But to do that, there is then a journey, the innovation journey, and that's what we've tracked through in this edition of Business Plus. Please follow up and talk to clients who you know are thinking about undertaking research and development, or perhaps have undertaken it. So you can show them the support that you could supply to them by utilising the product packages that you have from ESS BizTools. And I hope that helps you. We've included a teaser for what's going to be followed up in the December edition, and that is Wisdom from Michael Gerber. I had the privilege of watching a video that was prepared by David Jennings, the Managing Director of Systemology, whereby he had an interview with Michael Gerber a few months ago, and I found it very interesting. It's the first time I think I've actually seen Michael Gerber in the flesh, having read a lot of his articles over the last 40-odd years. But I found it very interesting. And I also found that Gerber was still on top of his game at 88 years of age. So that was very interesting. But we'll have more about the comments about Michael Gerber on small business, on planning, on utilization of systems, which is really what David Jennings has then carried on with Systemology. And we will have more about that in future editions of Business Plus. In this edition, we also have the follow-on from the previous month, where we looked at managing cash flow, vital for success, part 1. We've now produced part 2, whereby I have developed a hypothetical set of financials for a business, make-believe business, and then I've tried to track through what happens, because one of our members contacted me and said, "Why don't you write an article that really points out to people that just because they've made a profit doesn't mean they've got the cash that they can go off and build a new set of premises or whatever." So I hopefully that meets James's stipulation as to how I could put it together, and that you're able to use it to talk to your clients. Because what I've tried to bring into play is debtors days can blow out. Debtors days outstanding can blow out. Some businesses take risks with their creditors by blowing out creditors days outstanding. In this case, it went from 35 days to 50 days. And I'm issuing a warning there. The dividend payments had been running along at about $20,000 per annum previously, and then they blew it up to $60,000. There was an increase in the investment in work in progress. Did that mean that the invoices were not being raised quickly enough? I find that's a real problem in a lot of businesses. They let things sit in work in progress. Not much good there. They need to be invoiced so that it gets into debtors, and at least you've got a chance of getting paid then. And the stock in the business had increased by $100,000. Perhaps there was a reason for it. It just seemed to me to be spending money. And $50,000 had been spent on the building, where the building was already in the books at $500,000. Another $50,000 had been spent. So I've raised those issues so that you could talk to your clients about them, to say they made, and I forgot to tell you, in the hypothetical, the company made a profit of $220,000. But at the end of the day, they were literally into a bank overdraft position because all these other factors occurred. And I've had clients, and I'm sure you've had clients, who have come in and said, well, you reckon I made $220,000, where is it? And this is trying to explain in a hypothetical situation to a business operator just where money can go and why they haven't got it, that they can go off and have a trip to Disneyland or wherever they were hoping they could go. And hopefully they can go there with your assistance and input on things like debtors' days outstanding, trying to make sure that they're doing everything they can to get it reduced. In this exercise, I blew it out from 35 days to 40 days, and that's illustrating to the client, in this case, $57,000 that their profit was in fact tied up in funding the debtors because they hadn't collected the money. Why hadn't they collected the money? That's a good question. And hopefully they will take notice of that and be saying, this is the reason we've got to have our rhythm of meetings and be looking very closely at these issues so that someone is continually following up the debtors. So I hope you enjoy this edition of Business Plus. We are trying to target in on areas that will be of interest to some clients, and that you can follow in with discussions with them to see whether they're happy to have further work undertaken by you. Have a great day. Stay safe. Talk to you again next month. Goodbye.